Welcome back, my dear professional students. In this video session, we'll be preparing the statement of profit or loss. And the name of the entity we are preparing for is Gbenga Nigeria PLC. So we are looking at Gbenga Nigerian PLC. And we are preparing the statement of profit or loss and other comprehensive income. And other comprehensive income for the year ended. For the year ended December 31st, 2015. Okay, so the first item here is revenue. And from the correction, the revenue as given in the correction was 2,290,125. 2,290,125. So we'll go back to the correction and see if there is returns inwards. Return inwards. Okay. No returns inwards. Since we don't have any returns inwards, then we will determine our cost of sales. So that means we have to go to our workings. That'll be workings 9. To determine the cost of sales. The cost of sales comprises the opening inventory, and I will get the figures for the opening inventory from the trial balance. And for the opening inventory, it comprises of raw materials, work in progress, and finished goods. So I need to go and add those three together. Raw materials is 162,600. 162,600. Work in progress is 49,125. And finished goods is 276,750. And the addition of the three gives me 488,475. That is the addition of those three. So let me go and transfer that as my opening inventory. So my opening inventory is 488,475. Then there is purchases, and all the purchases of raw materials, because this is a manufacturing setting. They will only purchase raw materials, which they will convert to finished goods. So we will get that figure also from the trial balance. I saw it, so hope you're looking at it too. Don't leave it to me alone. Have you seen it? Because I've seen it. And this purchases of raw material, and it is 1,125,900. So Let's go and transfer it. Purchases of raw material. Purchases of raw material is 1,125,900. After then, we'll go and check if we have returns outwards of raw materials or carriage inwards of raw materials, which we are going to add. So, I'm checking. Okay, I've seen carriage inwards. Okay, and the carriage inwards was 15,750. I would definitely go and add the carriage inwards. But what I can see here so far is that I don't have returns outwards. So, I'll go back to my workings. And that's 15,750. After carriage inward of raw materials, there is manufacturing wages. And the manufacturing wages was 375,000. 375,000. Then, we will move on to the next item. There is manufacturing overheads. And the manufacturing overheads was 187,500. 187,500 as the manufacturing overheads. Was 187,500. Okay. So if you add all of this together to give us the cost of goods available for sale, so let's add them together. So 488,475 plus 1,125,900 plus 15,750 plus 375,000 plus 187,500. Okay. So that gives me a total of 2,192,625. Okay. So we'll go back to the question to pick our closing inventory. I remembered. I almost forgot. Remember that this plant and machinery, we were told that it should be charged to production. Plant and machinery, that's depreciation on plant and machinery. Okay, I'll pick it. Let me just add this closing inventory together. This three. The raw material is 168,900. Then the finished goods is 413,025. Then the work in progress is 56,700. So it gives me 638,625. That's my closing inventory. So let me quickly check the plant and machinery, the chart for the year that will be charged to cost of sales. It's 18,000. Okay. So let me not forget the depreciation of on P&M, which is 18,000. Then we deduct the closing inventory, which is 638,625. Okay, I hope we have picked all relevant items, because when we cumulate that, we get the cost of sales. Just checking if there is any item affecting the cost of sales. I've picked this plant and equipment. Okay, no. Okay, no items again. And here, I hope you have picked all the necessary items. They didn't tell us, so we'll just put it in admin. Okay. So let me go and cumulate it. So let me get my cost of sales. And that will be 2,192,625 plus 18,000 minus the closing inventory of 638,625. And that gives me 1,572,000 as the cost of sales, cost of goods sold. Okay, 1,572,000. Okay, so I have 1,572,000, and that will be the gross profit. Okay, so what's the difference? 2,290,125. Then that gives me 718,000. Let me clean this. 718,125. Okay. Now, let me see if I have other income, because that's the next item. Other income. There was an allowance for receivables at the end of the reporting period. Okay. And there was none at the beginning, because they didn't give us any of such information. So, other income. Okay. Because items of other income I'm looking for here are items like interest received, dividend received, rent received, and what have you. But we don't have any of those here. Since I don't have other income, then I would go and deduct administrative expenses and distribution cost. So I'll go and work that out. That'll be a working stain. Admin and distribution. Okay. So let me start with depreciation. So depreciation For motor vehicle, was the admin part is 3,750. I'll just cumulate everything together. 3,750. The furniture and fittings is 7,500. Then plant and machinery should go to cost of sales. This amortization of land and building, let me just take it to admin. Okay? Plus 2,250. Okay. Okay. That's basically it for depreciation. And the total gives me 13,500. So depreciation that will go to admin is 13,000. So depreciation, let me call it depreciation and amortization. For admin is 13,500. So the one that will go to distribution, I think it was only this motor vehicle. And we got it as 11,250. 11,250. Okay. Now, having picked the depreciation and amortization, let me go through my workings because I don't want to miss anything out this time around. Tax, no, will not go to admin. We have picked all depreciation. All depreciation. Accrued interest, that will be finance cost. Legal fee, yes, we have to remember to come and deduct this 7.5 that was capitalized and this revaluation surplus. Okay, so let me go to my trial balance and start picking the figures one by one. So we have administrative expenses. And the administrative expenses alone itself, 237,150. So let me go and keep it there, 237,150. So we go back. I'm picking admin first. Let me pick all items of admin. Then I'll carefully go and pick distribution. So I've picked admin. Then the next is legal and professional expenses, which here is 1,150. It's 1,150. We must remember to deduct this capitalization of legal fee of 7,500. So I will deduct 7,500. And I'm left with 73,650. So let me go there and have 73,650. 73,650. So that is legal and professional fee. Let's call it legal fee. And it's 73,650. Okay. So going back to pick other relevant items. So after the legal and professional fee, the next item here is allowance for receivables. And it is on the credit. That shows that it is an increase in allowance. For it to be on the credit, yes, allowance for receivables should be on the credit. It should even be an expense. Because this allowance for receivables, it will be deducted from the trade receivables. This is the provisions for allowance. However, So that means the other leg will have been in bad debt or some other expenses. Let's just move forward. This, remember, we're going to deduct it from trade receivables. So we have created inventories, work in progress, inventory of raw materials, purchases, carriage inward, manufacturing, then share capital, authorized. These preference shares, or when we have a preference shares, there is always a fixed interest charged on that preference shares, which is called a preference dividend, which according to IAS 32 will be treated as part of our finance cost. We have to remember that. So it has nothing to do with admin. Okay. Can't see anything here again. Okay. So nothing more. Alright, no problem. So let's move on to selling and distribution. And the only item relating to selling and distribution I can see here is this. And it is 175,200. 175,200. So let's go and transfer it. Selling and distribution. One 175,200. Okay, so let's cumulate all of this. So let's add these three together. That'll be 13,500 plus 237,150 plus 73,650 gives me 324,300. And for the distribution, that will be 11,250 plus 175,200. That gives me 186,450. Okay, so let me go and transfer it. Admin is 324,300. Let me write it down so that I won't forget. And distribution is 186,450. I won't forget that. 186,450. Distribution 186,450. 186,450. And admin is 324,300. So now I can get my profit before interest and tax, which is synonymous to my operating profit. So 718,125 minus 324,300 minus 186,450 gives me 207,375. Okay, we're getting there. Now the next one now is the finance cost, and so far I've seen two. One is in our workings. From our workings, yes, this one. Let me just start from the beginning. Okay. One is this accrued interest. This accrued interest of 15,000. And the second one, let me go and note the accrued interest of 15,000. Accrued interest of 15,000. So finance cost. accrued interest of 15,000. Then, time to waste. So let me just go and have that 15,000. Then, the profit before tax is 207,375 minus 15,000. Then that gives me 192,375. Then I can have my income tax expense, which I've noted down here. Income tax expense where's my income tax expense? Where's taxation? Okay. Income tax expense will be 68,900. So I'll go and have it here as 68,900. So that will give me my profit for the year. Which will be 192,375 minus 68,900. And that will be 123,475. Then, I'll have my other comprehensive income. And that will be, firstly, my revaluation surplus. Okay? Revaluation surplus. And the revaluation surplus we had for this current reporting period was given in the additional notes. And the revaluation surplus was 20,000. Okay? For this current reporting period. However, there was a revaluation surplus in the notes. Where is it? Okay. This 65,000. Okay. So it is in the trial balance. So 65,000 plus 20,000. And that gives me my total revaluation surplus to be 85,000. Now, what I was thinking is, the one in the trial balance, if it's not relating to this current period, right? Maybe it's a revaluation surplus brought forward. And that's most likely what it should be. It relates to the previous period. And then that should reflect in the statement of financial position and not here. Okay, so let's just treat the one they gave us in the additional information here as 20,000. Okay, so be on the safe side. So our total comprehensive income would be 20,000 plus 123,475 plus 20,000, and that gives me 143,475. Okay, so with this we have prepared the statement of profit or loss. In the next video we'll round it up by looking at the note B, which requires us to prepare a statement of financial position. We will do that in the next video. Thank you very much. See you in the next video.